a little bit about what's happening at Montana Community Foundation. And I'd like to turn this part of the presentation over to our President and CEO, Mary Rutherford.
Thanks, Emily. Thank you all for patching in today. We hope that you find this webinar series informative and interesting as you learn more about the things that we're doing here at the Montana Community Foundation to serve Montana in perpetuity. We have some exciting things happening. Probably one of the most exciting in my life here at the Community Foundation was the election of several new board members that occurred at our annual meeting in November. And I just want to give you a quick update on who those people are. So if you have more interest in learning more about them, you can always go out to the website and read their bios and a little bit about them. But starting with Barbara Byrne, who joined us from the Ulm, Great Falls area. We have Casey Lozar from here in Helena, who also is actively involved with the Salish Kootenai group up in northwestern Montana. Laura Brem from Missoula. Scott Pankratz from Missoula. Kelly Brueggemann from Billings. And Tanya Roop from Wilsow. And those are our newest board members. And you can, as I said, read more about their bios on our website. Also, many of you have already learned through our communications, but I think it's such a great point I have to share that the Montana Community Foundation Board approved an increase in the payout rate of our endowment. So we historically, for the last several years, have paid out about 4% of our endowment to the distribution across Montana, and this year the board approved an increase of that to 4.5%, and they believe that that's definitely a prudent move given our very strong investment returns over the years. And Emily and John will be talking more about that, but it's definitely worth celebrating because that enabled us to actually distribute a significant amount of more money across Montana. It's well over $250,000 just by making that single change. Another thing that happened at the annual meeting is the board authorized staff to begin a feasibility study on the possibility of a nonprofit center here in Helena. And we're now starting with, we've had a community convening, and we're starting into an actual survey and partnership with the Montana Nonprofit Association that will explore whether there is an interest in creating actually a physical space here in Helena that will foster cross-collaboration and convening and conversation and collaboration among the nonprofits here in Helena, as well as possibly be a center available to nonprofits all across Montana when they come to Helena. So many of you may be receiving that survey in the next couple weeks, and I would strongly encourage you to take a look at that. You know, there's a possibility that we could take a portion of the investment that we currently have invested in Wall Street real estate and invest it here in Montana. So it's a possible way for us to serve our sector, invest in Montana, and diversify our own sources of revenue. We're not convinced yet anything's going to happen from that, but we are launching into the detailed research of doing that. And finally, I'd just like to share that we've been really involved in bringing together the conversation across the community foundation sector here in Montana about the Give Local initiative that's occurring. I guess that's not finally, I missed a point, sorry. So 5 communities now in Montana will be participating in a Give Local Day on May 5th. I guess the final point that I somehow managed to skip that's huge is the creation of the Montana Office of Gift Planning here at the Community Foundation. And many of you have already had the pleasure of meeting Amy Sullivan, who is heading up that office for us and has absolutely hit the ground running working with private foundations, families, nonprofit organizations, other community foundations to really actualize the research findings that we had in the intergenerational transfer of wealth study and work to preserve in perpetuity those things that we all care about here in Montana. And she's working through that office to facilitate that type of activity, working with not only the donors and the organizations, but their professional advisors. So with that, I'd be happy to answer any questions, but I just want to share that Emily and John and Mary Kriegel will be going more in detail on a couple of these topics. But welcome, and thank you for participating today.
Great. Thanks so much, Mary. This is Emily, and I just want to take this opportunity to expand on what Mary had to say. And we're thrilled to say that in 2015, we had our best endowment payout ever. We had 500 endowments at Montana Community Foundation that made payouts just a couple weeks ago, and that helped to benefit 311 charities in Montana. Cash payments that went out the door were $1.25 million. We had granting funds that were made available for our 124 donor-advised and scholarship funds to the tune of $1.14 million. And our total payouts were at that $2,387,935. It's really exciting as CFO to see what a great impact we're making across the state and having those dollars go out. And as many of you saw and are aware, that was an increase from last year. As Mary said, we went from a 4% payout to a board-approved 4.5% payout. And in dollar amounts, that ended up being a 25% increase in payouts since last year. And we actually deployed an additional $445,000 across the state in those endowment payouts. So we're sure excited that those dollars are getting back into the communities to help revitalize and keep our Montana the way we love it to be. Moving on from that, I do want to remind everybody kind of how this endowment distribution works. You know, as an institutional foundation as we are, we do follow all of the laws of the state of Montana in their adoption of the Uniform Prudent Management of Institutional Funds Act. Long name, its short name is MIFA, and many of you are probably familiar with that acronym. That law was adopted in Montana in 2007. It governs how we as a charity can spend from our endowments. The rate of payout that the board determines needs to be prudent, and it needs to aim to preserve the purchasing power of the endowment. And although that rate is not clearly defined in the law does declare that anything above 7% would be considered to be imprudent. So we are well within the range of doing a very good, prudent job at Montana Community Foundation. Coupled with that, you know, our investment policy has to align with our prudent management of the endowments, and within our policy, we do discuss and declare that our goals are to protect and grow the principal of all the endowments over the long-term basis, and to do that, we want to achieve the investment growth of 5.5% plus inflation. So this past year, that, as we stated, that payout was increased to 4.5%. And I just want to remind everybody that the board does review this payout rate annually and will make adjustments as necessary, although we sure try to strive and keep that payout at a steady rate to help provide stability and reliable support dollars for those nonprofit charities to count on in coming years. When in calculating that payout policy, the way that is done is the 4.5% rate is applied to the average fair market value of the endowment balance, and that balance is declared as being the permanent gift balance plus the accumulated appreciation and earnings in those funds. And when we look at the average balance, our systems are quite sophisticated here at Montana Community Foundation, and they do a stellar job of really fairly calculating that payout. And actually what it does is it looks at the daily average balance of that endowment over a 3-year period. So it's hard to, if any of you have tried to recalculate what 4.5% is off of your ending balance of your endowment, you're not going to quite get to the number because, of course, our system is doing a much more sophisticated calculation, and it's trying to look at a fair assessment, a long-term view of what that endowment has been to declare that payout amount. Next, I just want to remind the group as well, we always often get questions about what the fund management fees are and how those are calculated and how they are assessed. So this is a chance for me to just give a little bit of information on that. At Montana Community Foundation, we do charge 2 types of fees to the funds that we manage. The first type of fee is a Montana Community Foundation management fee. We charge that fee to cover our costs of administering the funds. And the fee income that we earn from managing those funds is used to further our mission, and that mission is our work to increase philanthropy in the state. I think it's really wonderful as a community foundation. We're using those dollars to improve where we all live. Those fees aren't getting used to furnish an office in New York or pad a salary of a big executive on Wall Street. Those fees are staying here in the state to make us a better place to be. And as well, the endowment fees that we charge are based on the type of fund that we have, and they range from 0.25% to 2.25%, depending on that type of fund. The second type of fee that we have is the professional investment manager fee. We do work with a great group of investment managers, top-tier investment managers that we access through our brokers, John Hedge with the Anderson Hedge team out of Billings. And with those professional and management fees, those are allocated directly to the funds, and each fund gets a pro rata portion of those fees based on their size in the pool. And we recently worked closely with our custodian and our investment managers, and we've renegotiated those fees down to a lower rate. And I'm happy to say that currently our professional investment manager fees are at 55 basis points. Are there any questions so far from anyone?
Yeah, I have a question.
All right.
The 2.25 rate, what is that charged on? When does that kick in?
It depends on the type of fund. To have a rate as high as 2.25 would be one of our premier donor-advised funds, where we're doing a lot of the grant review, solicitation, and that we're providing a lot higher level of service. The primary type of funds at Montana Community Foundation have a fee of around 1% to 1.1% is the average fee of funds here.
And then the 55 basis point is on top of that, correct?
Yes, that is. And the two, those higher fee endowments typically are scholarship endowments.
Okay, can I, well, I don't want to hold this up, but I had some other questions about, investing in Montana rather than Wall Street, but maybe this is not the right time to ask that question.
I'd love it. I'd be happy to talk with you offline, and we could schedule a call together if you'd like.
Okay, let's do that.
Wonderful. With that, I am happy to introduce Mary Craigle, our Board Chair and Investment Committee Chair. This is her chance to say a few words to you as a group. And Mary, I'll let you take it from here.
Great. Thanks, Emily. Can everybody hear me fine?
Yes.
Good. First of all, I want to thank all of those of you that have joined us for today's webinar. It is exciting to me to be able to celebrate all the good news that you're going to hear today, not just about the record endowment payout of $2.3 million, the change to a higher payout rate of $4.5 million, but also record numbers of assets under management. We've actually had a threefold increase in the last 20 years just based on investment earnings. So I don't know about the others on the call, but after gloom and doom in the 5 years ago with the Great Recession, it's so exciting to be in the spot that we're in today. As board chair and investment chair manager, I'd also like to thank the investment committee members. They work hard and they are very thoughtful and judicious with every decision they make. We do meet on a pretty regular basis, at least quarterly, but often more frequently, have calls all the time, just to make sure that we are making decisions that are in the best interest of every donor. And then on top of that, equally important, I need to thank the Community Foundation staff, not just for today's work, but for all the work we do. Their professionalism and the competency and the care they show for our donors is truly the biggest asset we have, so I want to say thank you for them. Lastly, I'd like to give out an invitation as board chair if any of you ever have thoughts or comments concerns or questions you would like to address specifically to me, I'm happy to field those. Would love to hear from you. And I can I'll have the Community Foundation make sure that my contact information is available, but anything you would like to share as board chair, I would love to hear. As the second graders over at the school by me say, either joys or concerns, so please feel free. At this point, I would like to introduce John Hedge. He's going to be providing the overview of the great news I have just talked about in terms of our investments. John is the first vice president of the Merrill Lynch Global Wealth Manager Group at Merrill Lynch. John and his partner, Craig, in their investment team have been supporting the work of the Community Foundation for over 20 years, and we are so appreciative of all the services and the due diligence and the great returns that they have sent our way. So, John, thank you so much again for what you do for us.
Thank you very much. I appreciate it. Yeah, my name is John Hedge, and I will be the sole member representing our team with Merrill Lynch Global Institutional Consulting. And we're very blessed to live in Billings, Montana, and we cover the Pacific Northwest. So we have the best of all worlds. We have a regional practice, but we live in the great state of Montana. I'm very pleased to be on the call today, and I'll keep it going, and maybe I will start with just a brief market update. This is a very busy slide and lots of numbers, but it'll be posted here later for future reference. But I would like to point out it was a fairly unusual year last year in the financial markets. This is a busy slide, but if you let your eyes move up to the top right-hand corner under stocks, and you'll see some indices there. Indices are proxies of how the general market has moved in the stock market. Many of you have heard of the Dow Jones Industrial Average. That's the first one there, the DJIA. Many of you have heard of NASDAQ. That's an index that's pretty heavy with technology. And then you'll see the S&P 500, which is probably the broadest stock market index used when we reference how the stocks did last year. So you can see over in the upper right, the 2014 percentage change, U.S. stocks had a pretty good run, didn't they? They ranged anywhere from the Dow was up 10, NASDAQ was up about 15, 14.7, and then the S&P 500 was up about 14%. So the U.S. stock market did quite well. Fortunately for your portfolio, you had a large footprint in U.S. stocks. The international stocks didn't fare so well. If you continue to go down about 3 more lines, there's a line there called MSCI EAFE. And I won't go through all the letters behind that acronym, but what it stands for is the international portfolios, the international. And you can see it was down 4.5%. So that was a big difference, wasn't it, last year between U.S. markets up anywhere from 10 to 15%, and non-U.S. markets down almost 5%. So we say in our business that diversification often helps us. Diversification into international would not have helped portfolios around the world last year. Next category down is bonds, and bonds had a very good year last year. Surprisingly, most folks would not have believed that bonds, the U.S. broad market there, you can see it was up 6.3% last year, very good year. As we all know from the headline news, if you drop down below and you see the commodity group there, not much good happened in commodities last year. You can see that gold, silver, copper, and particularly crude, you can see where crude was off almost 46%. So diversification into commodities would not have helped last year either. So that's just kind of a lot of numbers there, but that's a way to say U.S. market did pretty well, and that's about all that did well. So where we are right now, our thoughts would be, on the next slide here, that right now going into 2015, in a balanced, diversified portfolio like MCF has, we're currently recommending an overweight to large U.S. stocks, an underweight to small U.S. stocks, a neutral weight to international stocks, and we're continuing to underweight fixed income. And you will see later that's exactly how the MCF portfolio is positioned tactically. So we're right on top of where we want to be. Next slide just is, I think a picture tells 1,000 words. This picture shows a 20-year history of the growth of the investment pool. The way I like to describe this slide is the bars on the bottom half. That would be just if money came in and out of the Montana Community Foundation with no investment earnings. In other words, if you just put it in a pillow when it came out and then you just wrote, or came in, then you just wrote checks when it went out, you can see that that would be the bars below. And then the line is the total value of the portfolio. So you can see that you've had investment earnings almost of $49 million over that period of time. So we're going to review the process that's been in place for 20 years to bring those returns. It all starts with an investment policy. And what we've done here is we've just taken a paragraph out of Montana Community Foundation's investment policy. And we want to spend a moment on this because a process has a start, and the start is your investment policy, an extremely well thought out investment policy. I'm going to read with you the first paragraph. It says, the fund shall be invested in accordance with sound investment practices that emphasize long-term investment fundamentals. In establishing the investment objectives of the fund, the committee takes into account the time horizon available for investment, the foundation's financial needs and circumstances, and the role these funds play in satisfying these needs and other factors that affect risk tolerance. And then it goes on to say the committee recommends and the board's adopted, and I'll kind of speed read through this. First bullet, it's a balanced approach to achieve positive return. Second bullet, it's expected to earn long-term returns sufficient to maintain and grow the purchasing power. Next bullet is a long-term horizon with patience. We seek, next bullet, seek to generate income that would at least meet distribution needs. We do recognize in the next bullet there's risk associated with the markets, but we're going to do invest primarily for capital appreciation. We diversified the fund in order to reduce wide swings. And then we expect to, next bullet, expect to achieve investment results that are comparable with other professionally managed portfolios, endowments, and indices. And then we expect it to be consistent with this policy. So I want to take you back to the first line. What does it mean when it says, the fund shall be invested in accordance with sound investment practices? We thought it'd be important to drill down a little bit and share what Montana Community Foundation's approach is. Montana Community Foundation's approach is extremely disciplined. Mary had mentioned that, and I can certainly attest to just how seriously the investment committee and management at Montana Community Foundation takes this approach. It's basically a process. It's a 6-step process, and it starts with the investment policy. That's the mandate for the goals and objectives of the Community Foundation. MCF then, in step 2, their committee and management, they have studied the various asset classes, and they do understand the risk and return associated with all those other asset classes like stocks, bonds, international stocks, small cap stocks, etc. So then what Community Foundation does is they utilize Merrill Lynch's due diligence process coupled with their own, and they review managers. And we'll get into that in a minute. They take that process and they actually then conduct competitive searches where independent money managers compete for MCF business. So it's a very competitive environment where they want, and we can hire the best. MCF also uses that as a way to terminate managers. Then that highly screened group of managers is used to construct the portfolio in step 5. And then in step 6, quarterly, Montana Community Foundation measures the performance of those managers and takes a critical look quarterly. Should we keep those managers? Should we fire those managers? Should we hire additional managers to complement them? So it's a very dynamic, continuing, ongoing process taken very, very seriously. How does it work? Well, there's tens of thousands of managers out there. So MCF relies on our research team to take those tens of thousands of managers, and we use an 8-factor model that is focused on the firm, the resources of the money management firm, their methodology, and their investment results. And we take that and we screen that through about 4 screens where we take the broad range of tens of thousands of managers. We do an initial screen to get it down to a workable universe. Then we apply a very detailed, rigorous due diligence process, that 8-factor model, to then reduce the managers to the highest quality final screen. We then have a high-quality manager menu that we send to our investment committee at Merrill Lynch, and then that investment committee finally approves the manager's portfolios and recommendations and strategies. So it's a way that we've taken tens of thousands of managers and screened them into several hundred of the finest managers, and then those managers are given the right to compete for Montana Community Foundation finances. This whole process is independent. We at Merrill Lynch Global Institutional Consulting, we have no money management arm. We're your pure consultants. We're the liaison. We're the independent person between the Montana Community Foundation and those hundreds of managers who are out there trying to win the business at Montana Community Foundation. It's an ongoing process. You can see there on the bottom of the slide. How seriously do we take this? We take this extremely seriously. If you look at the next slide, you can see that the 2 lines down, the Investment and Research Due Diligence Group, that's the group that does nothing but screens and reviews for high-quality managers that we can bring to Montana Community Foundation, is about 250 individuals. So we take this very seriously. It's the most important thing we do, and we're highly committed to it. As a result of that process, currently, Montana Community Foundation has a very diversified group of managers, independent managers, that basically try to keep their job every quarter through good performance. You can see how diversified it is. Very proud of that diversification, and diversification in most market environments are very good. We can see last year diversification was one of those unusual years where it was really just the U.S. market that did very well, but we know that's not always true. In fact, if you look at the next slide here, you can see that it's been a very dynamic process. Over the last 20 years, you can see how diversification has continued to change, and we're trying to keep pace with an ever-changing investment landscape out there. You've added more stock categories, you've added international stocks, you've added other strategies including real estate, real assets, private equity. So you can see that over the years, the investment committee and management at Montana Community Foundation have been extremely diligent in trying to keep up with the changing landscape and diversified portfolio. Where you are right now is you have asset allocation ranges in your disciplined approach, and it all starts with the discipline of the investment policy. You can see that the strategic target is in yellow. That would be your long-term target. But you can also see that based on the investment environment, the investment committee and Montana Community Foundation management understands that there are times when we should be tactical, meaning overweight or underweight these classes. And so you can see right now that at December 31st, 2014, your total equities or stocks, those words are used interchangeably, equities are stocks, is at 70.6%, which is just right on top of the maximum. You'll say, well, aren't we a little over the maximum? And we say, yes, we are, and that's because you had a great fourth quarter, and then we continually trim it and rebalance it. So that's where you are. You can see very tactical, and we're going to continue to overweight stocks in this environment. That process, and that very disciplined process, has been in place for 20 years. And it's really brought the returns that you'll see here. And you can see through good times and bad times, we've kept that process. And what that process has allowed is in difficult markets, like you can see in 2001 and 2002, and then difficult markets like we saw in 2008, because of that disciplined process and the process of following your investment policy and rebalancing, see how fast those periods have recovered. Look at the recovery in 03 and 04, and then look at the recovery in 9 and 10. You can see that that recovery was made possible because Montana Community Foundation kept to their principles, their policy, and kept within their asset allocation ranges. Recently, this shows how the Community Foundation has done against other community foundations and our own goals. So for the trailing fourth quarter, the portfolio gross did 3% compared with our goal at 2.7, and then compared with the sample of other community foundations did 1.2. So this process brought very good returns to the community foundation, particularly compared to other community foundations around the country. And then you can see from there on over, for the trailing 1 year, gross was 6.3. We were a little under our goal, but well ahead of the other community foundations. And then the 3 years and 5 years also speak for themselves. And while I'm here, Emily, I don't know if you wanted to say anything about these returns versus the sample. Guess not. So what we'll do is we'll keep on going. The other thing we always like to look at is just, we know we aren't going to always beat our goal, but we certainly want to beat it a majority of the time. So what we did here is we just put up our own internal goal we set against the markets every year versus how we did. We're pleased to say that we would have outperformed the goal 2/3 of the time and lagged the goal 1/3 of the time. But then overall, that's why we're pleased to be able to compete and exceed the goal over a long period of time. That is a whirlwind coverage of the process, and that process has led to steady performance, and it's led to extremely good decision making, particularly in bad markets when it's very tough to stay disciplined and it's very tough to stay invested. So because Community Foundation has taken this so seriously and it's been very diligent, they have been able to weather those storms and recover in a relatively quick period of time. Thank you.
Thank you, John. This is Emily. I'd like to open up the webinar at this time for any questions from our audience.
I have a question.
Yes.
I looked at the list of managers. It's 50 managers. That seems like a whole lot. I mean, one is whether that's over-diversified. That's one question. And then the other question I have is that those 50 managers, do they charge management fees on top of your 55 basis points, or is that included in the 55 basis points?
Yeah, would you like me to handle that, Emily?
Sure, John, go ahead.
Yeah, a very good question. The number of managers that you have, the substantial or majority of the money would be distributed between about 9 of those managers. You would have a significant number of other managers or mutual funds involved in some of the more smaller tactical areas, like international bond funds, etc. But the bulk of the money is really concentrated with 9 high-quality managers. The 55 basis point fee earlier covers all fees, all consulting, all trading, all custodian. So actually, that truly isn't even the manager fee. That's the manager fee plus all of the other fees. So involved in running a portfolio. So many of the manager fees now have been negotiated down to 30 to 40 basis points, or 0.3 to 0.4%. So very aggressive negotiation by Montana Community Foundation to reduce fees.
Right. So the 55 basis point, that's it. There's no additional charge for the individual managers, correct?
Correct. In fact, it not only covers the individual managers 100% of their fees, it also covers all custodian, consulting, etc.
Okay, that's certainly a reasonable number. Thanks.
Thanks for
You're
your
welcome.
question. Are there any other questions that we can have brought up from the group?
Then I have another question if nobody has a question.
Wonderful.
Have you, I noticed that you're not using index funds. Would that be a good way to do it to, further reduce the costs? I realize the costs are very low already, but I was just wondering why there aren't any index funds in there. I'm just curious. It's not a big point.
No, that's another perfect question, and I can tell you that the investment committee and management has looked, Montana Community Foundation management has looked very, very hard at that. And so every manager hired, when they're interviewed and reviewed, they are always hired only if their historical performance has significantly outperformed the index fund plus cover their fees. So that is, at least to this point in time, why the managers have been hired, because as you mentioned, the manager fees now are getting pretty low, not a whole lot more than index fees, plus their historical and consistent performances. They've been able to pay for all their fees plus beat the index.
Okay, thanks.
Well, if there aren't any more questions, I would like to take this opportunity to thank everyone for listening in today. If you do have any follow-up questions, feel free to reach out to myself directly or anyone else here on the staff. And as well, Mary Craigle indicated her willingness to take a phone call if any of you wanted to reach to her, and we can get you connected with Mary as well. Is there any comments?
I already had one taker, and I look forward to the conversation. So great. Thank you so much for doing that.
Wonderful. And a reminder to everybody that we will have a recording of this webinar that we'll have available on our website in a few days. I encourage you to revisit the webinar if necessary. You're welcome to share it with your organization's board or fellow fellow donors or whatnot. So we want to be as transparent as possible and share that information. MCF is so proud to work to endow these gifts in Montana for perpetuity and have you be the beneficiaries of all of that wonderful charitable giving in Montana. So with that, I'd like to say thank you again for listening in today, and I wish all of you a wonderful day.
Thank you. Please stand by.